So, Nikunj, it's not just that there is, of course, a lot of room and levers available on the upside, but there's no that exuberance that we were talking about. It's not those, the tail stocks which are wagging right now. It's the entire market breadth which is quite healthy.
So, Nisha, it will happen. That's the construct of the market. See, markets, they follow a cycle. It's just that the characters, which is names, and the participants, they change. But the market, in terms of a cycle, it will always follow a cycle. And that's really the biggest truism we must realize and we must recognize. So, where are we in the cycle? That is what we must recognize. I think the belief that India is the India is where you want to be, I think that is a global mood shift in that. Second, that global shift, I think, is still an ongoing process. I don't think large allocations have come back to India, considering that we are still negative for the year. Guys, we're still negative for the year if you look at the YTD FI flow. And if I add back what FIs have sold in 2022, I think before it neutralizes also, a lot of money should come back to India. Second, I go back to that valuation point again. And let's look at that. Markets will peak out, either valuations have to become very euphoric. I'll be slightly repetitive with this one, but let's look at no harm in looking at the data, which I think is the most important data for me, the valuation picture. Nifty is below its 5-year average. Small cap index is way below its 5-year average, and the mid-cap index, even though the index has touched an all-time high, it is way below its all-time average. That peaked out when valuations were different. So the peak, I think, is the October 2021 data, and we are nowhere close to it. And for me, I think the market will peak out, and I'll tell you why it will peak out, barring any macro changes which come on the horizon, which we don't know. Those are events you cannot forecast, but if they have to happen, market will adjust. I think when demand and supply will change. And that, I think, is happening. Look at the number of banks which have started talking, which have indicated to their clients that it's good time to go and hit the market. Patanjali is planning an OFS, a big OFS. We understand that there are a lot of other companies which are planning to either go public, OFS and QIP started. And that is the time, I guess, when the demand will succeed supply, or fresh flows will go into some of these names and the secondary market buying will stop. I think we are not there yet, but come July and middle of July, I think you will see a race of new IPOs, OFS and QIP, and for me that is the turning point. I don't think we are there yet, but we will reach there yet, and that for me is a full circle. It's like a full circle has to be drawn. The pendulum has to swing from oversold to neutral to participation to FOMO to participation, excitement, euphoria, and then dumping of stocks. That's it. Simple.
Yeah, absolutely. Okay, let's also look at all the events that are lined up for the week ahead. Nikunj just highlighted what's happening within Patanjali. By the way, Patanjali is looking to meet several institutional investors, as we understand. Today as well as tomorrow, the meeting is organized by Antique Stock Broking. The promoter, remember, needs to reduce holding to about 75% from their current, and they aim to comply with the minimum shareholding criteria by the first half of the fiscal. So the 5.82 stake that they need to offload, that's valued at about almost 2,400 crore rupees. That is what the management had indicated when they last spoke with us. So this is going to be one stock wherein you can expect some fireworks. We will of course get you more on the buzz that we're picking up on Patanjali. But in the meantime, couple of key events as well lined up today. Remember, Prime Minister Modi begins his state visit to the US. This of course is going to come in amidst much fanfare. He's also going to from there be visiting Egypt. And that said, we are also this week, considering it's going to be a shortened trading week when it comes to the US. Remember, today the US markets are on the July 19th holiday. We are expecting the housing market stats. We're expecting the Fed Chair Jerome Powell as well, who's going to be testifying before the Congress as part of his semi-annual testimony on the monetary policy. So a couple of important data points. And of course, for our markets, we're going to count down to the all-time peak.
Yeah, and Aisha, the ring of an all-time peak just makes you wonder that, all-time peak, and then what's next? I think you will make a new high and go beyond that, because this new all-time high, I think, is coming after a gap of almost 18-19 months, which means markets have consolidated enough. Let's look at the data. I think this is the most important data, that what is the difference between the last all-time high and this all-time high. And that I think is very, very important. The construct of the market is very different. The global markets are very different. The interest rate regime is very different. Valuations are very different. And FI positioning I think is also very, very different. This for me I think is the most important indicator of, of where markets are. I think it should be October actually. Repo rates are declining, yields are topping out, crude prices have gone through a up cycle and a down cycle, and the FI holding, which was as high as 75% in December, today stands at 55%. So there is no participation, which is valuations are not stretched, retail participation is low, open interest is not there, crude is down, and interest rate regime is favorable. Everything tells you that markets are nowhere close to its peak. I'm sticking my neck out.